Hey there, welcome back to my channel where I share my trading experience and strategies. Today, I'm excited to share my experience with using the MACD indicator. If you are new to trading or just getting started with the MACD indicator, this video is going to be an easy to follow guide that will help you understand the basics of MACD indicator and learn effective techniques to up your trading game. So buckle up and make sure to hit the like button, subscribe and turn on notifications so you don't miss any of my future trading videos. So before we dive into using the MACD indicator, let's briefly understand what the MACD is. The MACD, or Moving Average Convergence Divergence, is a momentum oscillator that shows the relationship between two moving averages by plotting two lines along with a histogram. The two moving averages are the 12 and 26 period exponential moving averages. The two lines are called the MACD and signal line. The MACD line is the difference between the 12 and 26 period EMA, while the signal line is the 9 period EMA of the MACD line. There are various trading techniques for using the MACD indicator. In this video, I'll share my MACD crossover and divergence trading techniques. The MACD crossover technique is one of the simplest and most effective methods to find reliable entry and exit levels. There are two types of crossovers, bullish crossover and bearish crossover. A bullish crossover occurs when the MACD line crosses above the signal line. It generates a buy signal. On the other hand, a bearish crossover occurs when the MACD crosses below the signal line and it generates a sell signal. In my experience, the crossover strategy is highly effective to identify profitable entry and exit points, especially for day trading. However, you must confirm and validate the signal. One way that I use to confirm the signal is by checking if the crossover took place near a significant support or resistance level. For example, the proximity of the support level strengthens the bullish crossover signal. Likewise, the proximity of a resistance level strengthens the bearish crossover signal. If a significant support or resistance level is not available, I use the candlestick patterns to confirm the signal. For example, if it's a bullish crossover, I look for a hammer or a bullish engulfing pattern. I also prefer to have a strong volume bar during a crossover to confirm the signal. The increased volume tells you about the strong buying or selling pressure, which shows there are enough market participants to support the new trend, and most of the time it confirms the crossover signal. Now let's talk about the MACD divergence technique. A divergence occurs when the price and the MACD indicator move in the opposite direction. In a bullish divergence, you will see the price forming lower lows and the MACD forming higher highs. And in a bearish divergence, the price will form higher highs and the MACD will form lower highs. Both scenarios indicate a possible trend reversal, so I look to enter my trades in the opposite direction of the ongoing trend. But once again, it's important to confirm and validate the signal, and for that I use the RSI indicator. The RSI shows the overbought and oversold market conditions, and when the overbought and oversold conditions coincide with the MACD divergence, it reinforces the idea that the prevailing trend is weakening and more likely to change its direction. So if it's a bullish divergence, I enter my trades only if the RSI is oversold. Similarly, in the case of a bearish divergence, I enter my trades when RSI is also overbought. That's how I use the MACD crossover and divergence techniques to enter my trades. In my upcoming videos, I'll cover the MACD zero line technique and discuss how to use the indicator to pinpoint exit levels. If you found this video helpful, be sure to subscribe to my channel for more trading videos. Stay tuned and happy trading!